Good morning, traders, and welcome to this update on gold. Okay, we're doing this update today because we have CPI coming in this afternoon, 8:30 Eastern time. And as I'm sure you're well aware, those CPI numbers, depending on how hot they can be very impactful for, many things, but especially also gold. So with that said, we're going to look very quickly at the daily time frame. I want to make this video as quick and precise as I possibly can. I'm just going to quickly recap the previous setup we had on gold, which was last week, where we anticipated the Monday high to be taken out, and then to get this move down into $3,300, down to the new week opening gap, down to those pivots. And essentially, that's exactly what it played out. So this played out really, really nicely. What I'm about to show you today is more of just being levels that I want you to be aware of. In the eventuality that we get kind of like, a violent move to the upside, downside, etc. So they're kind of just important levels to have on your chart. So with that said, so you can see the green line, the red line, this is a one-to-one extension. So just in case you don't know, it's this tool here called the trend-based fib extension, where I take a pull from the all-time high down to this low here, okay, and then come back up to this high up here, and that comes in, as you can see, $3,020 gives us the one-to-one extension. Also, the 1.618 gives us 27.85. Don't worry, I'm not suggesting we're going down here, but these are just levels that this respects. So I've marked here the one-to-one extension in green, and I've done vice versa. So I've also done the same pull to the upside, and the upside, it came in at 3,666, and thus we've put a red line up here too. I say 66, it was round about there. So 3,670, we're not far out. Now, in addition to that, we are going to use the TR extension, and I'm going to take that from this high to this low, okay, inside of this range. And you can see where we've been kind of getting rejected off of this 0.5, okay, and happened yesterday, and we're sitting below it today. Now, obviously, you can see quite clearly this aligns really well with our one-to-one extension, and also we have from the low, which is from the 17th of December, from this big move to the upside, basically from the start of the year, we have the anchored VWAP also sitting down at that 3K level. So that doesn't necessarily mean, okay, yep, we're just going to landslide all the way down here. But it does mean that we have many confluences at this level. In the scenario that we get, some rejection, some big hot, news, economic event, etc., you can, see how we can very quickly find ourselves sitting down at $3,000. The same argument could be said for a move to the upside. So in order to move to the upside, we need to obviously get above that 3,350 level, and start to basically claim it. If we can do something like that and start to sort of clear out some of this and, make that progression, then sure, you want to be looking up here for these kind of higher targets on the higher term time frame. So that is basically what this video is today. I hope these levels are going to, aid you in your trading. If you have any questions, please leave them in the comments below. I'll gladly answer. Safe trading today. Remember, the ideal thing to do today on CPI, I mean, of course, this is not financial advice, but, we could end up doing, a kind of classic wicking both sides before getting the move. So, there's no point, having a position and trading CPI, because you're just going to end up getting destroyed. So you're better off waiting to see where they're going to do the run on liquidity. Have every level marked on your chart in advance, and then make your decisions after that. Okay, that's my advice for the day. Have a good day, safe trading, and thanks for listening.